I was just listening to a Wall Street Journal podcast on money, and there's an enhanced 401k catch up that's now available as of 2025 January for folks that you got to be 60 years old to 63. Somewhere you got 60 to 63-year olds are finally old enough. The government thinks, hey, wow, you should be able to save a little more money in your 401k. And so now the maximum contribution, you can put in, according to 2024 numbers, you could put in $23,000 into a 401k. I think it's 23,500 for the year 2025.
Woohoo!
Yeah. And if you're over age 50, you could put as much as 30,500 bucks. That's the most you could put into a 401k. Now, the super duper fancy big news for Secure Act 2.0, they had a raise here for if you're a 60-year-old, you can put an extra, let's see, $10,000 into your 401k. So this means you can put in a whopping, what is that? Altogether, oh, it's 11,000. So you can put in $34,750. That's the max you could put into a 401k. Why am I saying all this? Tell me again one more time. What was the maximum the gentleman you spoke of? How much could he put in as a max? Was it
He could
$240,000?
literally put in between 234,000 and forty-two thousand
Okay.
dollars.
Wow. So that's unbelievably flexible.
Mm,
That's like the I can't even comprehend
mhm.
why we're so excited about the 401k's contribution flexibility. It's just not even holding a candle. Now,
Yeah.
some people might say, well, wait a minute. What if that guy couldn't even come up with the 42,000? Is he going to lose that policy if he can't do it?
Absolutely not. No. Yeah, you could do a policy loan, and you could actually use part of their cash value to cover a portion or even all of your premium payment for that year until you can get back on your feet.
Awesome.
There's a lot of options that you can do with that. You can even use portion of the dividends to cover. You can burn the flexibility option in the worst possible case scenario if you had to, and discontinue a lot of the expenses each year, and that would reduce
Mm.
your costs as
Yeah,
well.
through a reduced pay up option, right? Yeah, so you
Yeah.
can turn the premiums off completely there. So some people refer to this paid up additions rider as sort of the sail on the sailboat. What
Mhm.
does that mean? How does the paid up additions flexibility kind of relate to the sail on a sailboat?
It is what makes it efficient. It is what gets it moving. It is absolutely necessary when designing these with high cash value because typically, and this is a roundabout, but if you were to put in, $10,000 into a paid up additions rider, you can pretty much have an cash value that's about 90 cents on the dollar for each dollar that's in there.
Hmm.
So right out of the gate,
Mm-hmm.
which is pretty great. If you're talking about whole life and permanent life insurance, that beats term insurance in my mind as far as temporary goes. That's I like as many dollars going into that paid up additions rider as possible.
Totally. Well, and you're right there in the Nashville area, and we both know a great financial guru in the area, Dave Ramsey, and he would also object to your claims about access to cash. So
Mm,
he would say, if he were here, I think that whole life insurance is a terrible investment, and he would say that you have zero cash value in the first, say, 3 years. Tell me, is that true? Are you locked out of your policy? Do you have access to money in these accounts? What's your experience been like?
if that was true, you and I wouldn't be here doing this right now. It's absolutely not true. But I would agree with Dave Ramsey on one thing though, that whole life insurance is not the greatest investment
Hmm.
unless you're talking about investing in things that are like tools.
Yeah, like you can
It's
invest
not a
in your education, for example. Yeah.
Yeah, yeah. It's not intended to be an investment strategy, right?
Hmm.
This is intended to be something totally different that you can use as a foundation for your wealth to grow without interruption, and you can go and use it to invest in things like real estate if you